Hello and welcome to CNBC TV18's Mumbai newsroom. I'm Sumaira Apti and you're watching Pure Stocks. Let me start off by extending Diwali greetings to everybody who's watching, and I hope the year is all that and more. Joining in today, two of our experts, Ruchit Jain from 5paisa.com and Astha Jain from Hem Securities, will be answering all our stock queries. So good afternoon to both of you and thanks very much for joining in today. The first query comes in from Pavan Pawar. He has written in from Prayagraj. He says that he has 90 shares of LIC, which he has bought at 900, 300 shares of ONGC at 110, and 50 shares of Eicher Motors, which he has bought at 2,800. He's a long-term investor and now wants to know, how his portfolio stacks up and what are the future prospects. Astha, first to you, what would you recommend?
Yeah, hi, good afternoon, Sumaira. First of all, Diwali greetings to you and to your viewers. So first of all, talking about ONGC, I think he can hold the stock with the price target of somewhere around 140 to 155 at the initial levels. In ONGC, although we have seen the government has increased this windfall tax, which will be affecting its bottom line, but looking in the long term about this company, what I am finding very much promising is that they have led Vision 2040, in which they will be increasing their upstream production by 2x, their refining capacity by 3x, and in fact in the renewables also by 10 gigawatts. So I think whatever plans they are laying, the vision is looking quite promising, and on that basis I'm recommending him to hold it for the long term with the price target of 140 to 150. Maybe at the initial level he'll get these targets, but in the long term the targets are higher. Talking about LIC, he can hold, or one strategy which he can put on right now is that he can partially exit from this, because I'm not very much optimistic about the prospects of the company in the near term. Because what happened, although this company is really focusing on increasing its non-par share of the revenue, non-par in its product, but I think all whatever they are doing, it will take some time. In fact, they have a plan to increase VNB margin, but all this will happen by 2025. So I think it is a long-term story. So if he can wait patiently for such a long-term duration, then only hold. Otherwise, partially exit is recommended for LIC at the current juncture also. Third stock is about Eicher Motors. So again, the stock is looking very strong. I recommend him to hold with a price target of 3,800. For Eicher, I think the new product launches, especially with this Hunter 350, which they have launched recently in the August, I think the company's volume growth will be going higher. In fact, they have done their channel expansion also, and their export volumes are also increasing, and on the input cost prices are also decreasing. So all in all, everything is going good for Eicher Motors. So hold is recommended. Initial price targets are around 3785 to 3800.
Okay, those are Ambuja Cements numbers which are flashing for you. On the face of it, the standalone numbers look like they're lower than what our estimates had put out. So on the revenue front, it seems in line, but the rest of the numbers are below, and even the standalone margin has come in at 8.3%. So we'll have Nigel joining in a bit to put all of these numbers into perspective. But overall, it's looking like a bit of a miss, and the stock too is down over 1.5%. But getting back to our query, Ruchit, I think you don't track LIC, but apart from that, what do you recommend?
Yeah, hi, very good afternoon, Sumaira. Well, firstly, let me wish all your viewers and your entire team a very happy Diwali. Well, yes, coming on to the queries, LIC has a very limited historical data on the chart since it's recently listed, so no view on that. But both the other stocks, ONGC as well as Eicher Motors, can be held on. Well, Eicher Motors, if we see within the two-wheeler space, has shown a good outperformance in last few months as well. And as of now, the trend for the stock continues to remain positive, where we are witnessing just a time-wise correction within a short term. So 3,300 is a good support for the stock. So keep a stop loss below 3,300 for potential targets around 3,800 first. And if that crosses, then 4,000 should be on the cards next. So continue to hold on to Eicher Motors. ONGC relatively has been more dependent on how the crude prices are doing. We have seen that when crude prices have cooled off from the highs, this stock too has seen some price-wise correction. But in near term, a pullback move could be expected in the stock. Technically, 145 is where the target projections are seen. So wait for a pullback towards 145, where you can again review the stock to take an exit.
Okay, the next query is coming in from Shashank Iyer. He has written in from Bengaluru. He has 180 shares of Lovable Lingerie, which he has bought at 203. He's a medium-term investor and now wants to know what should he do. So he's making a loss right now, and he wants to know whether he should exit, remain invested in the hopes that things could, probably the stock could head higher. Ruchit, what would you advise?
So the trend for the stock is not much positive. We have not seen any big volumes coming in whenever the prices are going up. It's just that the stock is trading around its 200-day moving average, which is around 144. So 144 is the support for the stock. Keep a stop loss below 144, and in case 144 gets break, then next support for the stock or where the prices would correct would come around 127 to 132. So I would say the trend is not positive. Take a sell on rise approach on any pullback moves towards 158, 160. Take that as an opportunity to exit from the stock, and 144 for now should be kept as a stop loss.
Okay, Astha, what about you?
Sorry, Sumaira, we don't track Lovable Lingerie, so I cannot give my comments on that.
Fair enough. Okay, the next query that we have comes in from Vaishali Sheth. She's written to us from Mumbai. She has 900 shares of Indian Hotels at 250. She says she's a long-term investor, and now her question is whether she should book her profit right now or hold on in the hope that the stock could head higher still. Astha?
Talking about Indian hotel in the long term, definitely the stock will give very strong results. But if she has any sort of hurry in booking out the profit, then only I'm recommending her to just partially book the profit. But I would recommend that she should hold the stock for the long term. Initial price targets are 350. Talking about Indian hotel, I'm very much positive about this company because they have a strategy by the name of Ahvan 2025, in which there are certain targets set by the company, and the most important, which I'm feeling is very important for any hotel companies, their EBITDA margins, which is at around 33%, they are targeting by FY25. So again, this sounds very interesting to me. In fact, they have other plans also. And what we are seeing right now is a strong traction in this industry as a whole. Their average room rates are going higher, occupancy levels are going higher. So all in all, a very strong candidate in this industry as a whole. In the shorter term, maybe some sort of volatility can be seen, but in the longer term, the stock will definitely yield good results. So 350 can be set as the price target at the initial level, and I recommend her to hold it for the long term.
Okay, Ruchit, what about you?
The short-term correction could be seen in the stock towards the support of 286, 287, but mid to long-term charts continues to remain positive. So if he has a view of about mid to long-term, then continue to hold on to the stock. When it comes around the support of 286 or 285, I think those should be ideally be levels where one should take a review whether to buy more shares or not.
Hi, welcome back. You're watching Your Stocks. Our two experts, Ruchit Jain from 5paisa.com and Astha Jain from Hem Securities, are with us answering all your queries. The next one comes in from Abhishek Kamath, who is written in from New Delhi. He says he has 100 shares of RBL Bank, which he has bought at 200, and 50 shares of Minda Corp at 270. He's a long-term investor here and now wants to know what should he do. Should he remain invested? Should he sell and move elsewhere? Ruchit?
I think it's better to remain invested. RBL Bank, after that decent price-wise correction, the stock prices have now started recovering gradually, and we have seen that the volumes have also started picking up. So at least an up move towards 160 could be expected in mid to long term. And whenever it comes around 160, I think one should again take a review over there. And even Minda Corp, if you look at the broader structure, has not been negative much. But in the near term, the stock may see some consolidation and correction towards 175. So the long-term chart remains positive, but in short-term, 175 could be seen where the stock, in case it wants to average, then should review again around 175.
Okay, Astha, what about you?
My take is hold for both the stock. For RBL Bank, I think the bank has got the new management, which is more, they are more focusing towards the sustainable growth. So that is looking very interesting to me. And in fact, they are, giving the guidance of around 10 to 15% growth. So I think all in all, RBL Bank is looking a decent at current juncture. So hold is recommended with a price target of 165, 170 at the initial level. For Minda Corp, I'm again recommending hold because I think they have a various EV specific products in their product kitty. So that will be, in this whole EV drive, they have an important role to play, and they have got very prominent clients also. So in the longer term also, Minda Corp is looking good to me. So hold is recommended for both the stocks.
Okay. Sujay Divedi is the one sending us our next query. He has written in to us from Kanpur. He says he has 200 shares of Tata Power, which he has bought at 137, and he also has 10 shares of Timken India, which he has bought at 1877. So now the question is, hold or sell? Should he book profit or should he remain invested? Astha?
For Tata Power, again, hold is recommended because I think this company has got a strong future plans. So all in all, it is looking good to us because they have majorly focused on the green business and the clean business. And in fact, whatever capex they've announced of around rupees 1 trillion, 80% of that will be on the green energy only. So it will be yielding good results to the company going ahead. In fact, they have a plan to doubling of their revenues and and increase their PAT by 3x in the longer term. So Tata Power as a whole, there is no worry in this stock. So hold is recommended for this stock. And what was the another stock, Sumera?
Timken India.
Okay, talking about Timken India, I think he can hold the stock, although he is in profit right now, I suppose. But again, the results which they have posted in the quarter gone by were excellent. And in fact, what will be the future triggers for this company is the announcement of the Vande Bharat trains, in fact, 90,000 wagons. So the products of this company, which is the anti-friction bearings, they all use in all railways, etc. So I think this company has got a strong future prospects. So hold is recommended for this stock also.
Okay, Ruchit, what is your advice?
I would recommend hold on both the names. Tata Power has already seen a price-wise correction. Now what is going on is a time-wise correction. And I think from mid to long-term perspective, the downside seems to be limited from here on, as the stock has already formed a good support base around that 190 mark. So continue to hold on for mid to long-term in Tata Power. Timken India, the stock has already seen a good rally, but now it's entered into some time-wise corrective phase where 2700 is a good support base for the stock. So I would advise to keep a stop loss below 2700, and in case that level breaks, then it would be wise to book profits on the long positions.
Okay, Hemant Kesave has written to us from Aurangabad. He has 50 shares of Sundaram Fasteners at 777 and 50 shares of Canara Bank at 185. Now he wants to know what are the future prospects and what is the recommendation. What should he do at this point, Ruchit?
So both the stocks are should be held on. Sundaram Fasteners have seen a gradual up move. It's a slow and gradual up move, but volumes are good along with the price up move. So over a period of time, can expect levels around 975 first, and in case 975 gets crossed, then 1050 should be the ideal targets for the stock. Canara Bank, in fact, the PSU banking space have been doing relatively quite well in last few days, and we have seen that the price up moves have also been supported by good volume. So I think going ahead also, maybe from next 1 or 2 years perspective, this entire PSU banking basket is likely to show some good outperformance in the markets. So continue to hold on to the stock. On declines, 230 is now a good support for the stock, whereas on the high side, 290 to 300 would be the immediate resistance to watch out for.
Okay, up next, Ganga Ram Bansod writes to us from Baroda. He has 100 shares of Havells, which he has bought at 1100, and 175 shares of VA Tech Babak, which he has bought at 370. He says, what should he do now? I mean, that's his question, whether he should remain invested or not. Ruchit?
So ideally, Havells last few days have seen a decent correction, and post results we have seen that the correction has also been accompanied by higher volumes. Generally, we see whenever prices see a sell-off accompanied by higher volumes, then they tend to underperform in the short term. So I think I should look to make a switch in this on any pullback moves towards 1230, 1220. That should ideally be good range to take an exit from the stock for now. And VA Tech, Babag, also we have seen that recently in last few months, the stock prices have seen more of a time-wise correction and has not been showing any kind of directional move on either side. Now the support is 250 and resistance is 300. So next directional move would be seen only on a breakout on the either side of this range. So keep a stop loss below 250 for now on your long positions and continue to hold on.
Okay, Ruchit and Astha, thank you very much to both of you for joining in and answering all our viewers' queries. With that, we're going to wind up on your stocks for today. Thanks very much for watching. The team of Closing Bell joins you next.